Gas prices are spiking amid the war in Iran. Now, the U.S. is suddenly allowing Russian oil sales for another month. What does this mean for your wallet? In a surprising policy shift, the U.S. government is allowing the sale of certain Russian oil for an additional month. This reversal is aimed at easing the surge in gas prices caused by the ongoing war in Iran. Previously, sanctions had heavily restricted Russian oil exports, but the new move temporarily relaxes these limits. This measure is designed to increase oil supply and stabilize fuel costs at a time when geopolitical tensions threaten the global energy market. The conflict in Iran has severely disrupted oil production and shipping routes in a critical region for global energy. These disruptions have tightened supply, causing gas prices to soar in the U.S. and internationally. With limited alternatives, the U.S. decision to allow more Russian oil sales is a strategic move to offset shortages and calm the volatile fuel market. This is critical as consumers and businesses feel the direct impact at the pump and on costs. Allowing some Russian oil back into the market is expected to marginally increase global oil supply. Russian crude, previously restricted by sanctions, represents a significant volume that can help fill the gap left by Iranian supply chain disruptions. This easing could stabilize prices and reduce volatility in international energy markets. However, this is a short-term fix, as geopolitical tensions remain high and supply risks persist. For you as a consumer, this move could mean some relief at the gas pump in the coming weeks. With increased oil supply from Russia, prices may stabilize or even drop slightly, easing the financial burden on families and businesses. However, the situation is fluid, and ongoing conflict in Iran could quickly reverse these gains. Staying informed and prepared for fluctuating fuel costs remains essential. The U.S. extension of Russian oil sales is a tactical response to immediate energy pressures, but not a long-term solution. If the war in Iran escalates or sanctions tighten again, supply shocks could return. Policymakers will need to balance geopolitical strategy with economic realities, potentially leading to more rapid changes in energy regulations and market dynamics. Consumers should watch for updates as the situation evolves. This temporary U.S. policy shift could mean lower gas prices for you, but the energy market remains unstable. Staying aware of these changes helps you prepare your budget and choices. For daily updates on urgent global news that impacts your life, subscribe to Daily Q&A now.